Okay, welcome guys. I want to show you a great strategy for crash and boom that will help you make money trading crash and boom. This strategy, if you understand it well and use it well, you will make money trading crash and boom. Seriously, you will make money. So before we get started, just give this video a thumbs up and subscribe to this channel. You turn on notifications so you'll be notified each time we drop a new strategy trading synthetic indices. Each time we drop a new strategy, you'll be notified so you understand it and know another way to help yourself make money. So this is how this strategy works. You open your MT5 and this is crash and boom. This is my 1 minute time frame. This is my 1 minute time frame, as you can see. So, and this is the 3 level zoom. This is the first level zoom, second level, and the third level zoom. So we are using the third level zoom. Then what we need to do is you click on the indicator tab. The first two indicator we'll be adding is the average directional moving index. The average directional movement index is the first indicator here. So the period is period 50 pixel style. The style is 2 pixel. The plus di, it's also 2 pixel, but you choose the color of your choice, but I'm using green. Then the d minus is also 2 pixel. It should be the color of your screen, just like my MT5 is white, so I'm using white. Same goes for the style. Also, it's also the color of your screen, so it's holding the plus di 2 pixel. The plus di that you should use another color different from the color of your screen. Then the levels should be 0, 5, 10, 20, 35, 0 and 0, just like this. So this is how you can set your levels. You click the add button, then write the number you want to add at your levels. Then the style, it should be 2 pixel. You take a color of your choice, but I'm using blue, so that's for that. Then you click done. The next indicator we'll need here, it's the commodity market. Same at indicator window 1, you look for commodity market, commodity China index, commodity China index. Then the period, we're using period 14, apply to typical price, 2 pixel, we're using green. Then the levels is minus 100 and 100, minus 100 and 100. Color, you can use the color of your screen as well. So you click done. Then the next indicator is moving average. Moving average levels. The levels is moving average. We're using, for the moving average, we're using period 10. Period 10. Shift 0. Method simple. Apply to close. Then the style is 4 pixel. We're using 4 pixel for the style. The color, let's take red. We're using red, so that's all. You click done. Then the next indicator, which is the last indicator we'll need, is the market facilitation. Click on the indicator tab. Click on add indicator, market facilitation. So yeah, market facilitation, which is the last indicator. You click on it. The volume, you use tick. Line width should be 4 pixel. 4 pixel. MFI up, we use green. MFI down, you use black. MFI up again, black. The MFI down, green. So this is how you should set yours as well. No levels, so you click done. So the indicator is ready. So this is how this indicator. So guys, this is how this indicator works. Yeah, this is how it works. So what you need to do is to watch out for this red moving average. Once this red moving average crosses this dark green line, this line, yes, once this red moving average crosses above this line at the overbought level, which is from this 100, at the overbought level, consider a sell. Get ready for a spike, just like this. It crosses above at this point. Yeah, at this point it crosses above. You see the spike. Look at the line. It was immediately it crossed the next candle. It tried to be a buy, but it became a sell. It tried to be a bullish candle here, which is at this point, but it came down. It returned back. So at the same time, this point as well. Yes, this point. You can see, but you see, it was the green moving average that crossed above the red here. There was no sell. But look at this point. This point, the red moving average crosses above it again. Look, it crossed above it. Consider this straight line. It was at the last bullish candle, the last bullish candle that the cross occurred. Yes, it was at the last bullish candle that the crossing was completed. Look at it. Then the next candle was a sell. And something to note is that when you catch a spike like this and the candle from this graph here and the next candle is a black candle, just like this, just like this black candle. You understand? The next candle, if that next candle is a black one, then you expect another spike. Expect another spike just like this. You see, you expect another spike, and this is it. So this is how to catch spike and crash and boom. So let's check more. Okay, you see this. You see, the moving average crosses this dark green line. The red moving average crosses above this dark green line at the overbought level. At the overbought level, please take note of that. It's possible to cross anywhere and crash, but we are using the overbought level just to be careful, to avoid risk. We are using the overbought level because it works perfectly well in the overbought level. You see the spike. You see the sell. Okay. So this is how it works. Let's check on. And another thing I want you to note, it's better to draw your candles to the beginning of your screen, just like this. Instead of using it this way, it's better to bring it closer to the end like this, because it is more accurate being at the beginning of the screen. You understand what I'm saying? It is more accurate. You see, I set this spike and you see it has spiked. It has spiked. I placed it. Yeah, it has spiked. Okay, and it is a black one, so I'm expecting another spike. I placed this trade when it just crossed here, this point. I placed it. I entered this market here at this point, and you see, I caught the spike. Though I was busy doing other things, so I couldn't go off the trade. But since it's a black candle here, this candle, since this candle is a black one, then I'm expecting another spike. So I will hold on for the market. So let's check out others to learn. You see, the reason why you need to put it here is that, you see, at the beginning your candle was like this. You will find out that this graph of this red moving average is here. So it's not accurate. So it's better you put it here, just the way we did it before. You place your shift your graph to the end, to the beginning of your screen, so you understand it well, so it can work perfectly. So you see it crossed here and you got a spike, and you see it was a black candle. It was a black candle. Both the little candle inside, they were all black. So you know that the next you are expecting a spike and it must come. You see, it's a spike for this black, another black candle. You see, we'll get another spike. You see, so this is a green. I do advise that you leave the trade once it's a green, because it is not sure. Because we are not sure of green. It might not come, it might come. And note that it's at the overbought level. Overbought level. Please, let's trade carefully. We are not here to lose money. We are here to make money, so we don't have to lose money. If you understand all the strategies, you will make money from it. True, sincerely speaking, you will make money from it. This is another reason why I said we should always shift our screen, our graph, to the beginning of the screen. Just take this reason. Had it been this graph, it's at the end of the screen just like this, and I see this red moving average crossing above it, then I will place a sell. Do you see this? I will place a sell here. Okay, this is a little spike. Okay, let's forget that. Okay, let's see. Already I'll place a sell, right? And then this is another one. I see it moving, red moving average crossing this green line as well. Here, I will also place a sell, but not knowing that it won't sell. Let's see, it didn't sell. You see, it will just keep on loss. So from this point down, you just be on loss. So that's why it's better to shift it to this end. You see, if I shift it to this end, it won't show that the red moving average is crossing above until the accurate place that it crossed, until the accurate place that will give me profit. You see, that's how it works. So that's why we shouldn't make such mistakes. I hope you understand that very well. I just hope you do understand. Yeah, this is it. You see what I'm saying? It crossed here, but it didn't say. It crossed here. It crossed here, but it didn't say. But it didn't say. Look, it didn't say. It didn't say. You see, it didn't say until finally here, which is when I place it here. You see, when I push it to this end, you see when I push it to this beginning, the beginning of the screen, when I push it to the beginning of the screen, it doesn't show that the red moving average cross. But when I bring it to the beginning, look at the point that it showed, and that's where we got the spike. So had it been I entered this trade from here, this point that it crossed, then the next thing is after 2 candles, I got my profit. And I saw a black candle, which is this candle at the graph. I expect another spike. This is it. You see how it works, right? You see how it works. So when you see a red candle, a black candle, you can expect a spike. You see? So that's how it works. So this is how we make money from. You see this point, I told you I'm expecting a spike, right? I told you I'm expecting a spike because it's a black candle. You see, right? And this is it. It just spiked. You see what I'm talking about? This is how we make money. You see, it just spiked. And it's also a black. It's also a black. It's also a black candle. So I'm expecting another spike. I'm holding on for this candle as well because it will spike again. So I won't waste your time to wait for it to spike. I believe if you understand this strategy seriously, you will make money from it. This is how this strategy works. It's used to sell for crash, and for boom, you use it to buy. You don't use this strategy to buy crash. You use it to sell crash and buy boom. So let's just check for boom 500. You see how this strategy work for boom 500. You see, okay. What we need to do here right now, it's just same way vice versa for crash 500. You watch this market when the red moving average crosses, this time it's below, when the red moving average crosses below this dark green line, you observe, then we'll have a buy just at this point of this last red candle. This last red candle, it crossed, right? It crossed, then we got a buy. We got a buy, you see, we got a buy. So this is another, it's another crossing. This is another crossing. As you can see, this is another crossing. Though the crossing, yeah, this is another crossing. So I want to place a buy for this market. I want to place a buy. Yeah, I just placed a buy. And let's not worry, this buy, let's see, it's going to spike. So let's check on other examples for boom 500. You see, at the oversold, but this time we are using oversold for boom 500 at the oversold level. Look at it, it crossed below, right? It crossed below, from here, and look at the buy. It crossed below and look at the buy. You see, cross below, look at the buy. So that's it, that's how it works. Cross below, you buy at the oversold level, So see, for this spike, it crossed below at the oversold, you buy. It crossed below, you buy. So that's how this strategy works. That's how it works. Something to note, that you don't need to enter the market every time you just see a spike. Make sure it is accurate, that is, it is at the oversold or at the overbought level. That is for crash 500. Make sure it's at the oversold for boom 500. You see a crash at the oversold, you enter this trade here, and then a spike occurs. Spike. You see how it works. Spiked. The immediate next spike was a buy as well. You see how it works, right? So this strategy works well. Just use it well. Avoid risk. Use it well. We are still waiting for this one. You can see the spike, the crossing just started, though it has not been finalized, but we are going to get the spike. I'm expecting the spike. Yeah, so this is how this strategy works. It works well. I'm telling you, to avoid risk, please don't sell boom 500. You sell only crash 500, and you buy boom 500. You buy boom, you sell crash. It is very risky to sell boom. It's very risky to sell boom. Still waiting for this one. It's going to crash. Let's wait. It's going to crash. Let's wait. I don't want this video to be too long, but let's just wait. It's going to crash. It's going to crash. Sorry, it's going to boom. It's going to boom. So this is how this strategy works. This strategy works well. Test it and use it. Just try it on your demo account. You will make money from it. I'm telling you, you will make money from it. You will make money from this strategy. You make money from this strategy. Yeah, you make money. We'll make money to the glory of God. This strategy is good for boom and crash. For boom and crash. So thanks for watching this video, and you can subscribe to this channel for more videos on how to trade volatility, synthetic indices. Yeah, you can also watch my previous video on the best strategy for step index. That strategy is very powerful. The link is at the description. Watch the video for step index. If you like trading step index is a way I call it step index a money maker. Step index, it's a very good way to make money. Step index. Try the strategy, and thank you. Okay, yeah. This is what I was waiting for. You see, it spiked. I told you, right? Yeah. This is what I was saying. It spiked. You see, on profit. This is how to make money from boom and crash. You see it, right? It spiked. So that's how it happens. This strategy works well. So let me check back on the crash. Yeah. You see crash? It spiked again. You see the black candle? You see the black candle? It gave me hope for another spike. Black candle, another spike. Black candle, another spike is coming right here. So this is how to trade. Boom and crash. Use this strategy well. Take time to understand it, and I promise you, you will make money. Subscribe to this channel for best strategies to get notified, and turn on notification to get notified on the best working strategies for trading synthetic indices, both crash 500, boom 500, boom 1000, crash 1000, step index, range breaker, and all synthetic indices. So thank you very much. You can like this video if you enjoy it. Thank you.